Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
And Jim, as always, thank you for having me.
Tim, the S&P 500 hitting a record high, other markets looking like they're closing in on new records. What's going on there?
Well, all the while, interest rates continue to decline. We see key interest rate spreads that have inverted. We see others that have moved toward an inversion and have started to re-steepen, all of which are signs of something else going on. We see raw materials data continuing to literally collapse. We see key divergences with with major stock market indexes and averages, while the industrials and the S&P sit at a new high. Among those, the American Stock Exchange, the small caps value line, the broad-based European Stock 600, banking, automotive, airlines, heavy construction, the emerging markets. I could go on and on and on.
What does all this mean?
Well, in my work, it's fairly clear. It means that this is a continuation of the setup for a deflationary unwinding. It is not a reinflation we're seeing here following the December low. It is a continuation of the setup for the deflationary spiral that I think we face.
And what does that spiral look like?
Well, I think it's being masked. First of all, I think it's being masked by obviously equities. I mean, everybody's focused on, just as you said, the S&P and the Dow, and this was the same thing. Remember, we talked about this last year, following the top said, that the structure is the thing that is key, understanding the structure and the cyclical rhythm. And I said that, the Dow and the S&P were masking the top that was being built then. And what we're seeing is a continuation of that longer-term top being built here. What we are not seeing, the reason I say this is not a reinflation, is because if it was a reinflation, we would see commodity prices moving up. We wouldn't see the raw materials data literally collapsing. We would not see interest rates continuing to decline. We wouldn't see these spread inversions that we're seeing. So this is a continuation of the setup. It's a mass deception, an illusion, or maybe deception is a better word. I'll stick with that. And like I said, I think we're setting up for a deflationary, I don't know if we want to call it spiral, but a deflationary outcome. But equities are not there yet. I think it's definitely in the process. How long it takes, I don't know. It's a process. It has to complete, but that's the direction we're headed.
Do you think the Dow could hit 40 or 50,000?
No. I don't think so. I think that this thing has gone on, drug on, and been extended and manipulated, and they've managed to kick the can down the road, as the old saying goes, much longer than anticipated. But this is getting mighty long in the tooth. And looking at the things that are going on with these underlying deflationary factors, if you will, some of the leading economic indicators and so forth, I don't know. I need to see certain structural things with equities themselves fall into place before I can say, bingo, I think we're there. I can't say that until I see that, and I don't know when I'm going to see that. Maybe next week, maybe next month, maybe 6 months. I don't know. I mean, it'll happen when it happens. But what I do know and what I can see is happening is, like I said, all these deflationary factors are setting up. That is undeniable. The signs are there. But, it's being masked by, hey, everything's great because the market's still holding up.
Buybacks have been all the rage the last 2 years, but we saw Caesars and Sotheby's need to be rescued because they just reached the point where they borrowed so much money to buy their stock that they were in financial trouble. Is this going to come back to bite a lot more companies, the ones that have been busy buying up their stock with excess borrowed cash?
Yeah, I think it's going to bite everybody in the butt because, they don't, like I said, it's a deception. No one believes or sees, I guess you would say a better word is they don't see it. And if you do see it, you don't believe it at this point because it's gone on for so long. And so, I don't know what the implications, how far reaching the implications are going to be, but I think they will be very, very broad, once, like I said, we see the setup completed with equities.
We'll have more with Tim Cyclesman Wood right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the story on gold in this current situation?
Well, I know that everyone is excited about gold, and I think that people think that, because I think the people who see a problem with the market, I think they think, there's two schools of camp, an inflationary outcome and a deflationary outcome. And I'm definitely in the deflationary camp. I think the thinking is that they're going to print money and everything's going to be, they're going to either save the market or in the efforts of trying to save the market, they're going to create hyperinflation and gold is going to go to, I heard someone sent me a link last night, gold is going to go to $87,000 an ounce. And I'll just go on and say it. I think that's laughable. I understand. First of all, let me preface this because I don't want the gold bugs mad at me, so to speak. I mean, I understand gold is money. I understand gold used to be, I get it. I understand. But I also understand the research and the relationships and correlations and facts that I'm looking at this time. And the fact is that you can overlay, I have raw materials data that goes back to, 1800. You can overlay it with, and look at the correlation between the raw materials data and gold, and it is a leading indicator. Yes, gold can move in opposition to, the raw materials data on a short-term basis. And, I did not think, thought the 9-year cycle top was in gold. There was an outside chance that we would see another push up like in 96. And I mentioned that in the research letters on a couple of different occasions, and actually mentioned it just before this last push happened because I kind of sniffed it. Didn't really think it happened, but I saw the possibility. We've got this push up. I think it's a fake out move. I think it was a last push up into, the 9-year cycle top. And the fact remains that, you just can't dispute the correlation between raw materials data, which is collapsing, and gold. Those are facts. You can't dispute the fact that the other metal, nobody wants to hear this, but gold is not going up unless aluminum is going up. It's not going up unless lead is going up. It's not going up unless tin is going up. And it's not going up unless zinc is going up. My point in that is, let me qualify that. I don't mean to sound so hostile about it, but I think this is an important point. When you look at the structure of the market, and you go back, you look at these base metals, guess what? They all bottomed in 2000, 2001, right along with gold. They all went up into a high in 2007-8, right along with gold. They all declined into 2008-9 with gold in that 9-year cycle low. They all rallied into 2011 or so with gold. They formed divergences at those tops. The structure, you started to see problems at that top with these base metals not confirming that top, and then they all collapsed. I say collapse, that's kind of a strong word, but some of them were hit pretty hard down into, the lows in 15, 16. Well, now it's just a fact. I mean, someone can pull up the charts and look at them. But, tin is not confirming. Aluminum has fallen below its January low. Lead has fallen below its previous November low. Looking at zinc has moved below its January low. And what that means to me is the structure, knowing the degree of those cycle lows, it's a non-confirmation. They're not confirming. So how can you, on the one hand, accept the fact that, you look at this and say, okay, well, it's a historical fact that all these metals moved to the same cyclical rhythm and they all went up and down to the same pattern until now. And so now there's going to be a disconnect and all these base metals are going to go south, but gold's going to $87,000 an ounce. Silver's not even confirming. And so I'm sorry to say, but I'm not in the camp that this is a major breakout in gold. I think it was fueled by cyclically. It was just another push into a high, and sad to say, I don't think this is it. Now, until I get an intermediate term sell signal and some structure in place, yeah, the bounce is still underway. But I think this is a fake out in gold for sure.
We'll have more with Tim Cyclesman Wood right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, kind of a interesting factor here in Washington where we have President Trump saying he wants to devalue the U.S. currency, and we also have, even among the Democrats, a very left-leaning Alexandria Ocasio-Cortez saying they should devalue the U.S. dollar to help improve employment. Are you shocked, or what kind of a factor is it when you have both the right and the left calling for a lower U.S. buck?
Tells me that they're all pitching from the same team. I think to shine some light on that is that someone understands. I'm not sure they understand, but it tells me that they know that the only way out of this deflationary situation that we face is to devalue the dollar. I think that's the only way I see out. Otherwise, my research tells me that, like I said, we're setting up for a deflationary, spiral, collapse, whatever, it's a deflationary outcome. And I think that, that's clearly an indication that they know that, and that, that's the only way out, trying to maybe talk the dollar down, manipulate the dollar down. I don't know, but that's the only way out. It tells me I'm right, and they know it. And that's, they don't know I'm right. Hell, they don't know who I am, but I'm saying they know that this deflationary, development situation or whatever that we face is very much real. And I think that's the only solution they have.
Now, is deflation necessarily a bad thing? If things cost less, can't you buy more with less money?
Well, I guess from that perspective, it's good, but the other perspective is the deflationary, what we need is a flushing of the system. And that's, in my opinion, again, you can argue if the deflationary forces started in 2000, following the 2000 top or the 2009 top, and there's an argument both ways. I'm not going to, it's really a moot point at this point where it began. But that's what's being fought, is those deflationary forces for somewhere between the last 10 and 19 years. So far they've done it with monetary policy, and they've done a mighty fine job. They were able to reinflate coming out of the 2009 low, and here we sit at the biggest bubble that nobody even recognizes as it's a bubble, because they've been, I don't know, the norm has been renormalized to somehow perceive this as normal, and they don't even realize where we sit. So it's gone on so long, and it's what they've been fighting. I digress there, but it's those forces they've been fighting all along, and my thinking is that they're kind of in a box. I don't know how you're going to get out of the factors that we're seeing here that's developing at this juncture. And like I said, the only way that I can see is to devalue the dollar. And my hunch is that's probably not going to happen.
Well, what happens too in bad economic times, other currencies lose their value, and don't people rush to the U.S. dollar looking at it as perhaps the prettiest cow in the slaughterhouse?
Pretty much.
And if that's the case, can the U.S. bring down its currency? Even if they drop interest rates, will people still snap up the greenback?
That's the camp I'm in. I don't see how they're going to be able to devalue the dollar. And that's why I say I think that the inevitable deflationary spiral or unwinding or collapse or whatever, is inevitable once we get to set up in equities to complete this. But I don't know how can they, and I've asked other minds this, other people, how can they do, I don't know. I don't know how you can revalue the dollar. I just don't know how they can do that. And so I think one way is to try to talk it down and, manipulate it with expectation and that sort of thing. And maybe that's what we're seeing. Maybe it's that simple. Maybe that's what they're trying to do with comments like that. I don't know. I don't know how you can bring it down.
What about what's happening in the crude market right now? Is oil peaking, or does it have a ways to go yet?
No, I think it's peaking right along with pretty much the same story as with gold. We had an intermediate degree low. We still have an intermediate degree buy signal. Seasonality is right for a top. It's going to linger here until we get a sell signal. Once we do and we get, some structure in place to tell us that it's an intermediate term top, then I think it's going to be pretty much the same as gold. Also, if you look at the correlation with the raw materials data, which does not include which does not include crude oil, it tells us the same story as it tells us with gold. Crude oil is going lower. And so everything is telling me, like I said, I'm in the deflationary camp, and that, and it basically the dollar does move higher overall.
Why is it that central bankers have this 2% inflation goal?
Well, I think to keep the Ponzi scheme going, you need to continue to inflate. It's like the old saying, Richard Russell, one time, he's the first one I heard back in, I think it was following the 2000 top. We declined into the 2002 low, and he made the comment coming out of that low as we moved into what was then, I would argue was a bubble with, when Greenspan denied that housing was a bubble and so forth. Russell, somewhere along in there, he coined the phrase, or the first time I heard it, was he said, inflate or die. Inflate or die. And I think that's why they want the inflation, need the inflation. It's what they've been fighting. It's what they've been trying to, that's the whole point. It's what they've been striving for in fighting these deflationary forces, is to keep the inflation going or it dies. And that's where I think we're at, is that we're at this juncture where we continue to see all this stuff set up with these deflationary undertones, if you will, but equities are hanging. I mean, they're levitating, and it's not reinflating. And so by default, like I said, I think it dies.
Now, Tim, we went through a lot of stuff that's kind of complicated and hard to understand. Is there an easier way for somebody to maybe get a visual of it?
Yes, Jim. Over the last several months, I have tried to methodically lay this out, lay the groundwork as to specifically, what we're watching, monitoring the details, the data, hard evidence as to, the scenario that I see. And it's all covered in the letters. It's just available through the subscription. It can subscribe. It's Cycles, News, and Views.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles, News, and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.